As you can imagine, after such a seismic landslide by the Conservatives overnight in the UK election, the preeminent focus in UK markets is the pound. Now, it's been a huge surge for sterling, traded against the dollar. It has touched $1.35, fully 300 pips higher, and latterly was only a little bit lower than that, about $1.34 on the day, the best level since May 2018. Traded against the euro, the pound has seen its best levels pretty much since the Brexit deal, trading at 83 pence. And that is the best since July 2016. So clearly a clear signal for currency traders, given the fact that the pound against the dollar was trading around about $1.19 in September. There's been a commensurate impact on UK stocks. If you look at the domestically focused FTSE 250 index, it's up 4%. It did actually rise 4% in recent months. That was on the 11th of October, the date when the UK and the EU first signaled that they could be close to a deal. Now, the internationally focused FTSE 100 is also benefiting. Usually, you see the FTSE 100 slacking off when the pound rises because of the denomination of its revenues in other currencies. But the cheer is lifting the benchmark index as well. It rose about 1.9%, certainly its best gain for many, many months. So what happens next, and how can that impact markets? Well, the two key things to remember here are that the Labour leader, Jeremy Corbyn, has resigned, so that's going to cause all sorts of turmoil within that party. Some of that could spill out into the markets too. The other thing, of course, the Conservative Party are now, again, the ruling party of the United Kingdom. The leader of the Conservatives, Boris Johnson, has visited the Queen in the traditional proceedings following an election, and he's become Prime Minister again. He will now reconvene Parliament on December the 17th, and there'll be another Queen's speech. And the aim is to get his Brexit deal into law by the 31st of January, the new deadline that was agreed a few months ago. After that's done, an 11-month transition period, the agreed period, will begin. During that period, of course, the negotiations between the United Kingdom and the European Union over a substantive trade deal and trading relationship will begin. Now, this is where the scope for fresh uncertainty and fresh pressure on UK assets will come in. Because, of course, it's a very, very tight timeline. I don't think any sort of deal of this nature has been ever agreed in such a short space of time. So that's one thing. And then, of course, we know that the UK and the European Union differ so sharply in their aims and what they want to see in this trade deal. Although the Conservatives have got such a strong majority, they don't necessarily need to adhere or listen so much to disparate voices within their ranks. These voices will, of course, make their sort of opinions known. And the more Brexit-orientated aspects of the Conservative Party should pose some challenges going forward as well. So, of course, there's ample opportunity for UK markets, the pound, UK-orientated shares to experience pressure again between now and this time next year. For more information about how the UK election outcome is impacting markets, visit cityindex.co.uk.